Hey everybody, welcome to my basement. This is Greg Lewis, Marketing Director for Metastock. Today we're once again broadcasting from my basement. We should be back in our studio in about 2 weeks if everything goes as scheduled, so we're really excited about that. Anyway, I want to welcome everyone to today's market recap. I see we've already got some people, several people actually already here, even though it doesn't start for another 9 minutes or so. While you're coming on, hello RL and hello Thomas Jones from Edmonton. While you're coming on, from Florida, thanks RL. While you're coming on, make sure you say hello and let us know where you're coming from. Today's question of the day, can you get a haircut yet? I asked that yesterday, but we forgot to make the webinar live, so no one heard the question. So my question to you today is, you're coming on, can you get a haircut yet where you live? Can you go get a haircut? Because I can't yet. Maybe I won't. Excuse me. Actually, I think I can. I think they opened up a few weeks ago, but it's been so busy at all the barbershops, who calls it that, the style places, that I haven't gone yet. Oh, I realize I'm not even on camera. All right. So today's market recap guest is Oscar Carboni. Oscar Carboni is extremely popular, a force of nature, and you have to see him to believe him. He's just an awesome, entertaining, and extremely knowledgeable technician. We're really excited to have him here today. This is the first time he's done a market recap with us. Today's host is Hunter Smith, and this webinar today is only being shown on YouTube, so don't try to go to GoToWebinar, which is where we often simulcast. If you have any questions today, we certainly encourage them. Hey, Thomas Jones, he asks, where am I at? Well, I'm coming to you from Salt Lake City, the outskirts of Salt Lake City, Utah. That's where Metastock is located, and that's essentially where my basement is. Nate says hello from Santa Cruz. Hello, Nate. Forgot where I was. Oscar Carboni. So, yeah, it's been another a volatile week in the markets, and I'm sure Oscar will have a lot to say about it. I would like to remind you that we are sponsored by Metastock, as you can see. And to that end, I'd like to share a few things with you folks, if you don't mind, while we're waiting. One, let me change over here. We have yet another Trader Summit coming up. We have them about every month these days. The other one was just a few weeks ago, and because of a couple of scheduling things, we have to move this one up to a little sooner than we might otherwise have it. But the guests this time include Steve Bigelow, Thomas Wood, Bryce Headley, Jeff Gibby, our own beloved Jeff Gibby, Josh Martinez, who I don't believe has ever spoken for us before, so we're excited to hear from Josh, and Kurt Christensen, who it's been a time since we've spoke with him, and Todd Horwitz, and Ken Calhoun, who we have a long relationship and who's spoken with us many times. Hello, Hunter Smith. Hello, Harinder from the UK. Hello, Renzo from, he says, hola from Chile. Thomas, I already said hello to. Another thing I want to show you, in order to register for this Trader Summit, you can just go to metastock.com/Trader Summit. Or actually, I think now you can just go to tradersummit.com. I believe we've purchased that URL, so it's tradersummit.com. Hey, also, while y'all are listening, just please let me know if the sound is good and the audio is good and everything's good, because I did have some issues yesterday. So, hoping we fixed all that. All right, another thing I wanted to show you real quick. If you will go to our homepage, metastock.com, and you click on this little guy right here, the Speedster, it'll tell you about our spring event, which was extended through the month of June. But as you probably know, the month of June is almost over. So this event is almost over. And this event includes, if you don't yet have Metastock, I highly recommend you get Metastock if you don't yet have it. And this would be a great time to do it. You can get it for a great deal here. Or let's say you have Metastock, but you haven't upgraded to 17. You can do so here for a pretty good discount. And then also you can purchase Metastock here. And also we have a variety of Metastock add-ons that are available. Or if you just want to go here and click around and find out more about our products and more about our add-ons, that's a pretty good place to do it, because almost everything we sell is here. All right. We have how many more minutes? Let's check. We have about 4 more minutes, so I'm going to go ahead and just mute myself and let you listen to some jazzy music while we're waiting for Oscar and Hunter. I'm going to go ahead and check back with them and make sure everything's copacetic. Thank you again so much for joining us today.
Hello, everyone. My name is Hunter with Metastock, and welcome to today's market roundup. It's been a hell of a week, so we'll get right into it. Before we get actually down to the nitty-gritty here, I have to read the legal stuff, get that out of the way. This demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of our software and any trading strategies provided in connection with the company. Again, welcome. It is, it's June 26th. We've been at home for about 4 months. It's a little crazy, to be honest with you. So I'm coming to you live from the upstairs office, shared office space now that used to be a guest room. And I am proud to introduce Mr. Oscar Carboni. He was born in Manhattan, Staten Island. He created OmniCamp. He's been working with us for quite some time now. Oscar, how are you?
Very well, Hunter. How are you? And thank you for inviting me. A round of applause to you, Metastock guys. You guys are fantastic. There's always another event. I love this.
Yeah, we try. Something's got to keep us busy these days, you know.
So, yes, everyone seems to be either broadcasting from or trading from their basements or home offices or everything other than where they used to be.
Yeah, it's true. It's put a whole new perspective in it. I think it's brought a lot of people a newfound enjoyment, interest, whatever you want to call it, in trading. There've been a lot of people interested in trading. And that's why we've really want to start ramping up events with organizations and professionals like you, because hey, we're just software guys, right? You know, we need gentlemen like yourself to educate and show people how to trade. Just as a quick preface, everyone in YouTube right now, if you have questions or comments or anything like that, feel free to throw them in the chat. We'll be looking at symbols. We're going to start off a little bit more broad with the symbols, look at a couple of primary indices, and move on from there. But if you have symbols you want us to check out, just throw it in the old comment section. So it's been a little bit of an up and down week. Oscar, we're ending on a little bit of a down note for the week. What's your impression overall of this week?
Well, I think this week was actually healthy, considering that the market held up after NASDAQ making all-time new highs. Many times you get a big pullback after that. And the rush of Corona news, the television went crazy in the last 24 hours and back to, basically showing the threat behind Corona. So not as many protests on television. And it seemed that Wall Street locked right into it today and immediately started selling every bit of bad news that came out.
I agree. And it looks like they did a very good job of it. One of the things that has really been pushing this is, of course, the Corona. We've had, obviously the protests across the nation, across the world, but it didn't seem to affect markets as much. But reporting on all this news on COVID and all of these states seeing record highs. Here in Utah, we actually have today set another record for record highs. Where are you at, Oscar?
As far as that's concerned, I think what happened is they basically pulled the trigger on the herd mentality, if you will. In other words, if everyone gets it, or almost everyone gets it, some will perish. We don't want that to happen to anyone, but antibodies will build, and this will turn into another flu like other flus that we've had. We don't want a single person to die, but the actual death rate compared to the amount of people who get it isn't all that high. So I think by letting us out, they've created that herd mentality. And yes, now you're going to see major spikes. Hopefully, we'll all stay healthy through this. Sure. Those major spikes are scaring companies, scaring traders. And again, when that's the news all day long, it perpetuates until finally there's no one left that wants to take a shot over the weekend of being long. And I think that's what we've seen. But there's a much larger picture, of course. That was what happened today on Friday. But during this week, using technical analysis, we've built a very strong-looking set of flags and channels in the markets. And I think Wall Street will be looking at that come Monday to see if real damage has been done or if it was just a Friday, a little bit of a let's sell everything that we made money on this week and get out before the corona news gets worse, which is kind of what we're probably looking at short term.
Sure. And let me actually, I'm just going to turn the presenter straight over to you so you can share your screen and start looking at some of your charts. I want you to set that up. You know, an interesting point or an interesting thought is really how the U.S. government, how the individual state governments, et cetera, are going to be responding to these spikes, because it's, for example, you know, the microcosm here just in Utah, we've had the big spike. We were averaging when we first locked down at about 120, 150, 180 cases a day, right around that area. We're at like 672 today. We've been well above 400 for, you know, a week straight. So the state, it seems like, is at this crossroads where they're either going to say, you know what, let's lock everything back down, or they're going to say, you know what, everybody do what they need to do. And I think that that's going to be a pretty pivotal decision for the economy.
You know, there is this, when it first struck, kind of didn't know what to do with it, didn't know how to treat it, didn't know, do we need a ventilator? Do you not need a ventilator? Do we intubate? And there wasn't enough supplies. Now there's plenty of supplies. Every hospital's got protocol. Unless we have a severe outbreak epidemic, now we're sort of ready for this, and we're ready for the nation to get through it and hopefully once again build antibodies and move forward.
Let's see here. Looks like you are looking at, what are we looking at right now, Oscar?
So we're looking at the S&P daily bar chart, and the update for today does not exist yet. I don't know if I've actually even been updated. It doesn't usually show up till 5 p.m., but I will refresh momentarily and see if there's an update. So what we're looking at is what I have noticed has become the flavor of the month. And, you know, each month, if you're a technical analyst, there's a new flavor. Sometimes it lasts for a quarter, the flavor of the week, if you will. And what that will be is certain formations will start to show up all over the charts, same formations, and you deal with them until markets gyrate to a new level, and then different formations start to create. So what we're looking at, and before I go too far, please know this is an extremely risky game. You can lose way more money than you think if you sell futures, if you sell options. You can actually lose more money than you have in your trading accounts. And then you have to go to your spouse and ask for a check. And we don't want that to happen. So please know the risks. Always put your stops in. This is a very dangerous game, and only trade with money earmarked to be lost. That being said, if you do understand the risks, what you're looking at, the green, of course, the green trend lines represent a parallel channel. And it appears that that has been the flavor of this quarter in many charts, many stocks, many commodities, and all of our U.S. indices markets. And many times what you'll notice in the channel, and this is simplified analysis, but believe it or not, this simple analysis is what gets put into algorithms. The extreme levels, they look for that. So you're looking at it in the form of a chart, but if you just turn that into, if you look up here and you turn it into a digital readout, that's an algorithm. So they're looking for a lot of the same things we are, but they turned that digital. So they're looking for when a market does something like hit the top of a channel and then move away from that channel and start heading towards the bottom of a channel. And they're aware when they get there and they come in and start buying. So you're looking at a channel that worked from here to here, started to move back down, didn't make the bottom, didn't make the top, so the channel was narrowing, the channel. But if you'll note what's going on here, as of Thursday's close, Friday's bar isn't in yet, you have the bottom of a bull flag being tested, at the same time a bullish channel line, green, being tested, and you were testing the 200 bar moving average. I can guarantee every algorithm on the street has the three of those things in there somewhere, digitally, of course. So if you break that today, the market's going to pay for it. If you can hold that, buyers would come in. So this was the analysis I was looking at on Thursday evening for trading Friday. Let's see if it has now updated for Friday's down move. Yes, there's been an update. So if you'll note, there's an update. Now there's a red bar, still really testing the 200 bar moving average. If this channel right here is expanding, you would just pull the line a little bit and say, okay, so now the channel is expanding. Let me just snap the price off of that. So now it looks like the channel is simply expanding. And if it holds inside this channel for another day or two, sorry about that, guys, I can't highlight that. If it holds inside there, buyers come right back in. The next thing the street usually pays attention to dramatically is this 50 bar moving average and the 200 bar moving average. So we're sort of at a congregation of all of that being tested right now. And likelihood is, if it was not a Friday, if it was only Thursday, I think buyers would approach the market here at this level. So that's what the E-mini S&P looks like. And we can look at several if you'd like to go through a few of them, and then we can open up discussion to other stocks.
Sure.
You can look at something like the NASDAQ. It has the same thing going on inside of a wonderful channel. But in this case, you've got something called the Golden Cross, where the 200 bar moving average gets crossed over and the 50 bar moving average moves higher. Now, I kid you not, the street loves that as well. And it's usually talked about on all the chat rooms and, on Twitter and you name it when that happens. So if you look at the shape of NASDAQ, even though we had a down day today, that's in good shape, that chart. I mean, it just looks fantastic. Once again, the flavor of the quarter are these channels that are working really well. And the flavor of the last 10 days has been these flags. They are on just about every chart that I've pulled up that creates the indices, and almost every chart I pull up that's a stock, that's what we're looking at. So once again, you're at the bottom of this flag, and now we're going to add in today's NASDAQ. And as you can see, all it's really done was move to the bottom of that flag. So if you just keep things in line, or if they just keep it in line, maybe we'll pop right back up. Now, I've got an indicator called the Omni. It's Oscar's Market Navigational Indicator. That will tell me if the market's going to go up or down Sunday night for Monday. What I'm showing you now are formations, not exactly what I expect to do on Monday's trading. So for the end of the week, we're basically testing what were bullish formations, and NASDAQ has this channel to come down to and test right there as well. So indice number one, S&P, kind of looks the same, right? Bull flag, channel, lots of support there if they would like to come in and support it. And the NASDAQ does as well. One of the other major indexes that we look at is your Russell 2000. Let's see. It should be saved here. This one right here. Russell 2000, another one of the major indexes that the street pays attention to. And that, once again, is doing the exact same thing. It's inside of a flag formation, so it hasn't chosen whether it's going to work that formation or not. You've got the 50 bar moving average, and once again, the flavor of the month, you're about to bounce off this channel line, which when you get near it, an event takes place, the market rallies. So here we are, and this does have today's bar included, I do believe. Yes, we have today's bar already included. So all that shows us is that it stayed inside the flag. And on Monday, you're probably going to come down and test the 50 bar moving average, the channel, and the flag all at the same time. Once again, an analyst would look at that and think there's going to be support there. So those are three of the indexes that make up what I like to call the street. There's also the Dow Jones Industrial Average, which of course everybody knows that one, right?
Mm-hmm.
Is DJ, well, it should be .DJI. Okay, exactly the same. Another channel testing the 50 bar moving average, a bull flag, even though I don't have it highlighted. It's there. I just didn't darken in the lines. Mm-hmm. A lot of testing going on here. So let's see what happens today. And as of Friday, you were looking at the chart as of Thursday's close. As of Friday, we are now below that channel and testing the 50 bar moving average. So the first one to actually get below the channel is the Dow Jones Industrial Average. Now let's just go ahead.
Quick question for you. So if I've been out of the market until this point and I'm looking at, maybe buying an ETF, maybe getting diamonds or whatnot, and I am looking at this bouncing off the 50-period moving average. It's a little bit outside the channel. Am I waiting till Monday to see action above or below the 50-period moving average?
If you were going to buy, let's say you wanted to buy the Dow Jones, you would wait for now the market to get back above. Let's get this out of here. You would like to see a bar that takes you back above into the channel. Let's make that nice and thick. And then you'd want to see it settle for 2 days inside the channel. And then you would say, okay, that held and I am ready to buy more. And if you'll look here, basically this was the same sort of signal. Once it tested the channel and the 50-bar moving average, it held day one. After day two, you had your buy signal. So you wouldn't want to dive right in because maybe more COVID news comes out and they push it down a few more days. But the analysis tells us this: if you're not buying dips, you're not paying attention, because it goes up and then it dips and goes back up and then it dips. The reason why I've drawn all these bullish channels in for us is to just make you recognize, look at the shape of the market. It's going up, not down. It is in a bull phase. So we're going to get downward days and sometimes even downward periods where 3-4 days in a row come together. But right now, unless something changes, these markets have been quite bullish. And the transportation average, basically, if you ask me, looks the same, but we should look at that one as well. And let's open that file. If you look at the transportation average, you've got a much, much wider channel. Now, of course, that channel can be brought in, and as long as it's parallel, well, let's just create another one right on top of it. Why don't we do that? As long as it's parallel, it will still show you almost the same behavior that the channel has on the outsides. See where it bounces off it almost every time? So it's running in a parallel channel higher and higher. The thing that bothers me slightly about the transportation average is you see how this major trend line from the top hits 1, 2, hits 3, and then we backed off from that. So now, obviously, using simple technical analysis, we're heading for this. We're heading to test the bottom down here, like you did here, and like you should do here. And then if you note the pattern is, you're bouncing off of the resistance and support lines. Now, I kid you not, that is how you build the algorithm. That's how they build algorithms. I kid you not. So this is what's so tricky on the street. If you could recognize it with a good pair of eyes on a chart, you can stay in sync on most days with the algorithms. Now, today, because of that setup I showed you, we purchased and we were wrong. Today was a losing day for us. We have gone for, I don't know, the last 4 or 5 weeks. I can, just out of memory, I can't think of 4 losing days, especially not 2 in a row in the last 4 weeks. But every now and then the analysis is going to be tested and you will have a losing session or maybe even a losing week. But this analysis has proven, literally to me, since 1982, that it's about the best thing in the world. There's no system that seems to morph with market moves. 1987 crash, you know, then we had movement in the 90s. Then you had the 2001 dot-com bubble. You had, or 1999 dot-com bubble. You had the 2001 trade centers. We had 2008. We had, you know, Greece, Brexit, Corona, and the Omni still works well with markets. So the interesting thing is that analysis seems to work no matter what is happening out there. And trading systems that aren't employing analysis tend to stop working when the market shifts gears. And that's what I like about analysis. It's good old, you can count on it. You know, it's like having IBM in your portfolio. It's something that you can count on.
Right.
So these are the indices that we pay attention to. And with the exception of the Dow Jones transportation average, the rest of them still look really, really sharp. This one does as well, but it looks to me like it's going to come down here and test this bottom line. So the other stocks that you would look at if you really want to get a flavor of whether or not the market is breaking down or if we're still in a nice uptrend is you would look at the FANG stocks, because every fund is in the FANG stocks. So if we go through, if we had time and you want to look, we can look at Apple, Facebook, Amazon, Netflix, Google, And you would recognize, I have some drawn up if you want to go through them, you would recognize that they're all in really strong shape right now. Meaning the internals of the market are still in very strong shape.
Right. Right.
So
now talk to me for a second about drawing these channels, because I know some people in the audience will be wondering, okay, well, how do I draw these channels that you have pre-drawn on here? Is this something where you start off with the uptrend and then you just make sure it's a parallel for the bottom? Tell me how you hand draw those.
great question. And for you traders watching, this is a fantastic thing to do. It's called one of my tips or tricks. A lot of people will take the parallel channel and try to snap it on and force fit it somewhere. What I do is I take a line, so we'll remove this. I will take a trend line from the bottom and extend it, and then I will just simply ask for a parallel of that trend line. And if it fits, it gets used. If it doesn't fit, it's not, then you do not use it. And that fits really well, if you ask me. It almost fits magically. In other words, all I did was take the low from here to here, connected it and extended out. And then if you look at that, that connects the highs perfectly, like it was meant to be. So that's the proper way to draw a channel. If you take the parallel tool and try to force fit it, you might have a channel that looks right, but it might not be right. It might not be placed properly. So your question was correct. Go for the trend. If it's an uptrend, find the uptrend, then create a parallel channel of that line and snap it where it belongs.
Yeah, and that's kind of that's a real key thing for a lot of people is and I do it consistently still, and I'm trying to tweak it out of my trading mind, but I try to make things fit. I'll make a case for buying or selling a stock or entering into an option. And so being able to break it down into a simple step of drawing that bottom channel line based off of a trend and then just using it as a parallel, I mean, that's huge. It takes the guesswork out of it. That's what we're trying to do, right?
A lot of us traders are day traders. What I'm showing you when I say Wall Street pays attention, or how the fund managers are trading. So you might imagine somebody knew to get short at that line there somehow, right? Mm-hmm. How come suddenly the market just stops cold and drops? Now the line's established because you have this high to this high, and you extend it out. Well, how come it drops again when you get to it? What's that about? And then when you almost get near it, it drops. And then same thing happens at the bottom. So what you can see just by market movement is absolutely the funds are doing exactly that, staying inside of these big trend channels and selling at the top of the channel and buying again at the bottom of the channel. Once you break the channel, then of course either the channel expands or a new formation is being created. So when I mentioned many times that algorithms are built on these charts, it's exactly what you're seeing. Algorithms know when you get to the top and you hit one of those resistance lines inside of a parallel channel. So it's not all that difficult, traders. Don't let the street fool you with their terminology and everything. If you're not a fund manager and you don't work for Goldman, how could you know? They're peeling they're peeling the same information off these charts that I'm showing you. They're just turning it into digital form and putting it back out.
All right, we have a couple of requests. I'll give you the option, Oscar. Would you like to show a couple of the primary charts like an Amazon, Microsoft, things of that nature, and then get to the request, or would you like to dive right into the request?
I think we'll do that first, because at that point, I think then people have seen what I was hoping to show, that yes, we had a down day today, but it's probably not the end of the USA just yet. It's probably not happening because of one down day. Well, yes, we can go down further. It's not over yet, kids. Don't sweat it. All right, so we looked at indices like S&P and NASDAQ, Russell, Transportation Average, and the Dow Jones Industrial Average. And all of them look like they're in good shape because they're all in these channels moving higher. So as long as you're noticing that the chart starts on the left side of your screen and moves higher towards the right, that's a bull market that you're in. So what makes up the bull market, or any market, what makes up these indices are our stocks. And I think FANG is probably the best place to go look and see if this market still looks strong or not. And we'll get all the updates as well. So let's start with Apple's probably the first one I've got. All right, so if you look at Apple, channels are absolutely the flavor of the quarter. There is no doubt about it, because on every chart, every time I look, I notice immediately the parallel channel jumps right out at us. That's what the funds are using this month. So be it. That's what we need to use. So Apple, if you look, is sitting in a wonderful channel. It just keeps gyrating from near top to near bottom. Very strong looking. Let's update today. With today's update, if it came in 26, no, it did not show up. With today's update, I'm assuming all you're going to get is a drop to about here, and then the fund managers are going to come right in and say, wait a minute, are you going to let that one get away from you, boys? No, you're not. You're going to buy it right there. Will it work? Well, that's why we put stops in. But that's what they will do, because that trend line is as obvious as the day is long. And once again, because internally, somehow they're working on channels on Wall Street, they seem to be where you can keep yourself in check. If you weren't a day trader and you were swing trading and you waited for the top and bottom of these channels I've been showing you, almost every time you would have had a successful trade. Not just this one on Apple, of course. There are others that the channels are much closer and much easier to use. So Apple, if you look at Apple, even if you add in a down day, and let's make this red because you have to assume it was a red day today. So let's say we had a down day. We're just going to stay inside the channel very likely. So Apple, once again, it starts at the bottom left of your chart, goes all the way to the top right. It is absolutely a bull market. It's one of the big stocks that make up our indices. So we shouldn't get too worried that S&P is about to crash if the internals aren't crashing. So that's Apple. And next I've got written down Facebook, so we'll go there. Oh, my bad. I have to do it a different way here. Facebook. Once again, there's an abstract channel here. I kind of left it, I didn't darken it in so much. You can see if you touch that channel, it bounces from it. The last time you got near the channel, it bounced. But the bigger picture here is this sort of an Oscarism known as an F flag, if you will. It's sort of a crooked flag. So I call it an F flag. But what you will note is that even if you take the top of this flag and move it down, you will find that in parallel, you bounced off that line constantly. And then all it did eventually was increase in its size. So let's grab it and move it back to where it was. All it did was increase in its size. But that is a channel inside of a channel, which is really a bull flag, in my opinion. And once again, if you'll note, they're just selling the top of it and buying the bottom. When they get their chance, they jump all over it. They being us, whoever makes up the street, all of us traders. So, you know, if you use a good pair of eyes, I kid you not, you can see this stuff coming every time. And then all you have to do is be patient. Like here, it didn't go through the top. You wait for one day and then you've got a sell signal. So the bottom line, though, is look at how nice this channel is. Look at how strong it is. Facebook, once again, if it's an internal in the market, it sure is going up, not down. So the market itself, so we had a down day today. I don't think that's a scary thing at all, even if we get another one. If we get another down day or two Monday, Tuesday, so maybe it'll take us down to here, which will turn out to be a perfect spot to get long. And you continue to do that until the pattern stops. You'd buy it right there. So let's see what happens with that. So now that's Apple, Facebook. I'll try to be a little fast. I'll go through the other 4 very quickly. I think we have Amazon. Let's do open. Once again, channels continue to be the flavor of the month, and flags, they're built all through these channels. Every time I pulled up a chart that I wanted to show today, I looked at it while it was blank and said, oh, another channel. It just, I can't get away from them. So that's what we're talking about. But again, Amazon, a huge portion of the stock market, a huge portion of what we're all doing today, which is staying home or ordering things on Amazon and online. And look at this, once again, starts at the bottom, left and heads straight towards the top. So the market is bullish. Amazon might have some down days, but now that I've shown this to you enough times, what do you think happens like here and here and here? What do you think's going to happen if we spend the next few days and we end up coming down to here? Let me just grab that. What do you think happens if we end up down here?
Big bounce.
Should bounce, right? And
Right.
that is a simplistic way to make technical analysis work in your favor. You don't have to be an expert if you want to do abstract analysis like we're doing here. Netflix, I'm sure we're not going to find anything different there. Oh, in fact, look at this. Look at how well this one worked. Netflix, look at this channel it was in, and look at how it failed at the top, just like the fund managers know it's probably going to do, and then they abused it, just like it's supposed to be. It's almost poetic. And then where will it go? Probably down to here. And then out of nowhere, some bullish news comes out, and boom, you head back up again. So it's gyrating, and according to this, you might have a shot at coming down here now, because it failed once again in the same spot it always does, at the top or bottom of a channel. Channels, channels, channels. Hopefully we'll get away from them and some other fun, fancy formations will show up. But these are the ones we're stuck in now, but they present us with fantastic trades. And I think we just need Google, and then from there, I've shown you all the FANG stocks, which are all the internals of the bigger market. So let's just do that. And then whatever you want to look at, I am more than happy to share. So let's open and we'll do. So if you don't think the market works in channels lately, look at the blue channel, which morphed into the purple channel, and look at how well those channels worked out. And then within the channels, you've got smaller channels that you can play. I don't know if you can see them, but you can easily call this a channel. Inside these two lines, this whole movement stayed inside of a channel. You only had one breach of that channel the whole time. So right now, for whatever reason, the algorithms are just focused on tops and bottoms of channels. And if you stay focused on that, you will see the trading turns come for yourselves. The only other interesting chart that I found with this same theme in mind, looking quickly, was gold. And I know that that's a big question for a lot of traders out there. How does the gold look? So if you'd like to see that, let me see if I have a gold chart saved. There you go. Once again, really good signal comes from gold when it hits that top and fails. You can call it a triple top, or why not just call it the top of a parallel channel, which makes it easier to figure out what comes next. And then if you really want to look at this, if you ask me, it's nothing more than sideways consolidation till the next breakout comes, because that is a huge flag. The whole thing is one major bull flag. And that, I kid you not, the street is paying attention to. These flags, they don't form for no reason. Usually, news, I would say 99% of the time, without over-exaggerating, news comes out in the charts first. So building a big bull flag since March in gold, there's something that it's got a meaning. It'll come out at some point. But before gold moves away from us, we know what to do with it. And that is, when it gets to the extreme up here, you get short. When it gets down here, you get long. When it gets here, you get short. When it gets back here, you get long, until we finally break out. And once we break out, then whatever the new formation is, we'll hunt that one down as well. So to answer a lot of the questions that I had actually had brought to me in the last few days about the FANG stocks and about gold, I've done that. Hunter, what can I do for you?
Wonderful. Well, we have one question and we have a few symbols to take a look at. So should we hold stocks over the weekend after a down market? It's a good question.
Well, answer to that, did you have a long-term plan when you bought the stock? Or did you plan on buying the stock for a day trade and it's going against you, so now you're going to take it over the weekend? That is an absolute cardinal sin. You don't want to take a trade home because it's going against you if you should have been getting out either at the stop or the end of the day. If your plan was to buy that stock and not get out unless it hits a specific level, the weekend has nothing to do with it. That's a trading plan, and you stick to your plan. So if your plan was to get out, get out. If your plan was to stay in, don't question it. Never question your plan. Stick to your plan. Plan a trade, and then trade that plan.
Yeah, and part of that goes back to what's your definition of a down market, right? So, I can say it's a down market, but as you've shown earlier in this, it's actually still kind of a bull market. One day does not define, 2 days, 3 days does not define an entire market. He follows up with it's a short-term trade. So again, I think the answer would be to stick with your trading plan, and if you don't have one, get one.
If you don't have one, see this right here? Start showing up here every day. Live with Oscar.com. And that's what I live off of. We always have a trading plan before the market even opens. So between 5 p.m. and 6 p.m., we devise our trading plan. And then we just follow that plan flawlessly to the best of our ability till the market closes. That's winning or losing. Today's plan lost, and I still did exactly what I was supposed to do. Coming towards the close, we took our losses. We got out of the trade. No one that follows me had a chance to change their decision and hold it over the weekend because it wasn't working out in their favor.
Right. And again, it seems like I come back to this every week when we do these roundups. It is about eliminating as many of the variables as possible, because this industry has a million different variables, right? So if you do the same thing every single day, you're going to have expected results. And like you said, you've lost. Today was a losing day, but there's not that many of them, and that's okay. But it's only okay if you have a trading plan. So if you don't have a trading plan, get one.
Now, again, what Hunter is saying, there's more weight to that than you might think. If you don't have an actual methodical approach, a trading plan each day, then every day is mixed up of a new type of approach or a new plan or a new idea. And I'll tell you, after 39 years, the market loves consistency. You can come up with a losing trading plan, and if you apply it every day, eventually that plan will start to work in your favor because the market finds consistent people. If you are consistent in your approach, you will find a way for your approach to be consistent and help you win. Problem is, if you have a losing day on a Tuesday and you change a variable, change your approach, or change a different thing about how you're going to get in and out of the trade because Tuesday it didn't work, that's not a system. Then once again, it becomes spaghetti, if you will. It's like looking inside the mind of a crazy person. Every day there's an arrow going this way and then that way and then sideways and this and that. That's not how we do this. You've got to have a methodical approach. Every day, approach the market the same way.
Yeah, and that's huge. And, a lot of times I think that traders, and I did when I first started trading, I felt like that a stock would open at $50 because it was the magical stock fairies that made that number so, and everyone else is just trying to guess what they're guessing, right? But it's not. There is a method to all of the madness. We say that nothing's guaranteed, nothing's a sure thing, a sure bet. But other people are trading with these systems that have a lot more money than we do. And those are the market makers. And they have a system just like you should have a system.
Absolutely. Now, just to let you know that what you said is it all does come together magically. The analysis, trading systems, algorithms, it all does work out in a fine symphony, if you will. Here's for instance, if you're still looking at this chart, if I cut this line and I cut that line, how come if I just draw a line off these two lows and I take a parallel of that, how come it hits these highs? How is that possible? That's not by accident. You see what I'm saying? That is exact. It hits all three of those highs. So that is the whole street, the whole big picture coming together when traders react to certain signals when we get there. Those are funds, those are individual traders, those are everybody. So I can take this exact same line that gave you the top in 3 spots, and it gives you the only 2 bottoms that come out. If it'll move with me. Boom. Like magic. Interesting, right? So right. If I ask for a parallel of this line, it's going to be exact up here, and it's going to fit right across those, which is what it does. It hits the high here and the high here. And if you look to the right, it only went through a little bit. And obviously, they ran stops slightly above it, and that was it. Came right back down. So it couldn't possibly fit up there by accident. It's up there because the same algorithms that were selling it up here, we're buying it here, and we're selling it here, and we're buying it here, and we're selling it there, and we'll buy it down here when the time comes. So it does all come together, and it doesn't matter what form you're using, as long as you're using technical analysis of some form, you are still working with the same things, algorithms and trading programs, swing trading programs, you name it, they're working with the same things. And that's what you want to do. You want to follow the smart money and the street mentality.
Agreed. Let's look at some stocks.
Sure. What do you got?
What do we have? We have, looks like Workhorse Group, which is WKHS.O.
WKHS dot period or letter O?
The letter O.
Letter O. And I'm going to do that in here. I don't know if the stock will come up, but if I do that in the Power Console, I'm almost guaranteed the stock comes up. There it is. Is that it?
I hope so. Let us know if so. I'll read the symbol, guys in YouTube. I'll read the symbol off if it's not the right symbol, which it should be the majority of the time. But if it's not, tell me. But let's say that this is the right one.
Somebody whipped that horse. My goodness.
Wow.
Look at that. Obviously, a news or a buyout or something took place there. Let's go see if it makes any sense on a bigger chart, like a weekly. All right, so at least now we have some reference points. Right now we're looking at a weekly chart. Let's bring in as many lines as we can. All right, so now we have reference points. So, okay. Do algorithms get involved when you get up to these extremes? Well, I don't know. Do you think they're going to get involved? They did every time you've gotten up there. Or I should just say, I don't have to call them algorithms, fund managers. Do you think they get involved whenever you get to these extremes? Because I think they do. And what's happening next, of course, on the weekly is look where you're at. So if you can get past that, you probably have something major going on. Now, I don't know what the news was in this stock. It is called Workhorse Group, correct?
Correct, yes.
Okay.
And that's a big range.
Yeah, except for that, the problem is it's only from $2 to $9, so it's not really a big range, but it is for that stock.
True. From a percentage perspective, it's a massive range, and I'd be curious to know your philosophy on trading something that has jumped up that much in a week. Do you
take your profit and run? I wouldn't stay in that any longer. But let me show you 2 really unique things that happened on this chart just by me staring at them. I've been showing you how flags work. Well, if you just look at this bearish flag, which is this thing right here, it's a bearish pennant flag. It worked exactly the way it was supposed to. And then, of course, you come over here and you created this weird looking but sharp bull flag. And look at how well that one worked. And then you can just add the pole to it. So for whatever reason, flags and channels, it doesn't matter if it's a stock or if it's the indices, which of course are made up of these stocks, they are using these formations lately as if they're kids in a candy store. So of course, if I just darken in these lines, you can see this flag jumps right out at you, and it worked really, really well. So it's sort of the same thing over and over again. If you ask me, they just look for the formation, and when they see it and they realize everyone else on the street is seeing it. It becomes valid, self-fulfilling prophecy. Now, what else happens at the top of this bull flag? You get above the 200 bar moving average. So let me grab this. Look, the street knows what's going on. They did not see that. I guarantee you the street jumped all over that, and look at the result, that monster move that takes place next. So as you can see, this isn't voodoo, and I don't need to have charts preset up to show you how well these things work. Now, let's take away the flag, whole idea behind a flag. What else did you have here? You had a channel, and all you had to do was work inside of this channel to make smart trades. So whether or not you want to worry about what happens when you come out of the channel, that's deciding if it's a flag or not. Trading the channel, trading the flag, you don't need to look at it as a flag until it finally breaks out. So you can remove the pole so it doesn't confuse you. And this way you can take short trades and long trades inside of a flag. Because a lot of people would think, well, that's a flag. Why would I take a short trade inside the bull flag? That's right, as long as it's not breaking out. If it's breaking out, then you can't take the trade. But if it hits and starts to drop, like on this day, the next day it dropped, you've got a sell signal. So this stuff really does work hand in hand, and the street works with the analysis. The news works with the charts, and if you can read that, you can read everything. What other stock can we look at?
Let's see, LK.O. I believe it is going to be Luckin Coffee.
Oh boy, out of business yet? Did we throw them out of business yet? Or are we allowing them to still play this crazy game with us? No, I guess they're still in business. All right, so Luckin Coffee, below the 200 bar moving average here. Channels, once again, it doesn't have to be a bull market to be in a channel. Once you got below the 200, look what the street did to it. News came out. But charts always show you the news first. So you started hovering below the 200 bar moving average, and obviously the news comes out then, and boom, that they were cooking their books. But if you can note very quickly, look at how fast you could just spot these parallel channels were working as you were moving through these up and down phases. Now I'm just going to ask for a parallel trend line, so I'm not cheating. It can only fit if it fits, and boom, parallel channel. So why are they using parallel channels for the last quarter? I don't care. I don't need to reinvent the wheel. Neither does anyone paying attention right now. You just got to know how to make it go round and round on your vehicle.
All right, so next one. We have DocuSign, DOCU.O.
DOCU.O.
Correct.
Oh my God, I love this. I have this all drawn up on a different set of charts. Just wonderful looking chart lately. And now, do I even have to bore you with the parallel channel there? Can everyone see that channel?
I felt like there's one there.
It works like clockwork, kids. Now you can start it down here, and you can use this channel, and there'll be a parallel to that if the market is working in sync. And again, if it doesn't fit, you don't use it. If it fits, you use it. Or you could say, well, that wasn't what I wanted. Maybe we'll include this down here and go all the way up here. You just have to see what the channel is, create a parallel trend line, and when it fits on the top and bottom together, well, then you've got your parallel channel. That one I say works. And once again, and of course, now you've got that flag up here, which just broke out of, I don't know, it just broke out of this formation right here. Create a parallel of that. You can drop it right here and boom. So you had some kind of a weird looking flag type thing that was taking place. And once again, if you just call this the pole, you can visualize that as a flag, but who needs the pole? It's a channel. You work inside the channel till you break out of it.
So a question about process. If we're looking at that, Monday comes along, it opens up in its top third of that last bar. What do you do?
So, okay, once again, I'm blessed. I have something called an Omni. So that's going to tell me if I should buy or sell. Not everyone has that. So let's take that away. What you would do basically is if you get to this spot on Monday and it holds for 2 days, you can begin buying. If not, you're going to wait for that spot. and just buy it when it gets there. Your stop will be underneath it. If you're wrong, you get out under this channel and something new is taking place now.
Okay, wonderful. Ready for the next one?
Sure.
XLE.
XLE. And let's just do it elsewhere. Let me use the Power Console. All right, still the same. So XLE. Well, right off the bat, I would tell you I don't really like stocks that look like this. It's not a stock, it's an ETF. But you see the way it just jumps all over and there's a lot of gaps all over the place. Something that is obviously not open 24 hours. And what happens is the S&P jumps around for 24 hours or crude moves for 24 hours, and this is stuck all night long, then it has to gap to catch up to the prices. So I would turn right to the crude futures if I was going to consider trading this. Now, if you can't trade futures and you must trade this ETF, I would analyze the crude chart and then use the ETF for my trading. So in other words, crude is CL, let's go with Q. I would analyze, see how much smoother that looks? Now that ETF is built of this, crude oil. But the crude chart is nice and smooth and there aren't a lot of gaps and it doesn't look weird like XLE. You see how that doesn't look nearly as smooth? So being that this, you're going to trade this based on crude, analyze the crude, draw your trend lines. So here, go back to crude again. If you draw your trend lines and you find that, hey, look at that. Once again, we're in some kind of a parallel channel and it's working well. If that's the case, well, then when you get to the bottom of this parallel channel and you want to get long, I'm not saying that that's your trade right now, as an example, then if you can't trade futures, you go to your XLE and you buy the XLE at that spot. Wherever, when the crude hits that spot, go long the XLE at the market. That's how I would handle that, because analyzing this with all the movement and gaps, I think you'll find your analysis won't be as strong as using crude to then trade the XLE. Does that help?
Helps me. If, let's see here, LXE, or trying to find who put that if, let's see here.
Of course, while I'm sitting here, I'm spotting all these things like this bear flag that worked really well. I can, a chart for me is like Disneyland. All you have to do is leave it in front of me for a few moments. So you've got a bear flag here, worked really well. Believe it or not, this is a weird, but it's a Head and Shoulders building right here. I mean, there's stuff all over this chart.
Let's do, before we spend too much time in Disneyland, let's go to Bank of America, BA.
BA. Oh, what was
Boeing.
that?
Sorry, not Bank of America, Boeing.
Boeing. Oh, there you go. Don't know what all that other stuff was, but Boeing ended up coming up. So, all right. So Boeing, as you've seen, has just been, the street didn't even have to hear the news. The street knew at the 200 ball moving average, they started selling it because the news didn't come out till here, right? So the street just blasted it when it got to that 200 ball moving average. Now look at the difference. If it's above, they buy it and they stay with it. When it gets below, they stay with it. Here they tried, but it got right back below. So you can see that for whatever reason, and of course you could gather 200 days is a lot of days for a fund to follow. Funds are selling this at the 200 ball moving average. So abstract analysis, the first thing you do is mark that off and say, well, if it gets back up there, we're going to have a problem, right? Then you start to look at this and wonder, are we in a formation? Is there something smart going on? Maybe are we near the 50 ball moving average, another thing the street likes to look at? You start to look around and see if there's anything that you could grapple with. So there you go. You've got the 50 ball moving average. And we know the street likes this. And in fact, proof is in the pudding. They bought as soon as it got above it. First time in a while, in fact, right? They started to buy here. So now we've got another point of reference. What will happen here? And as far as this stock's concerned, between the trouble they had with that jumbo jet and then COVID, there's a lot of people who like buying this. I'm not such a big fan of getting long this stock. A lot of my friends have bought it. Some of them did well after this, but until they clean COVID up and traveling is something that we can all do safely, I don't know that the company making planes is going to be selling a lot of them.
Yeah, transports are rough right now. That's for sure. That is for sure. Let's see. Next stock. We got time for a couple more. ECH. Just ECH. I believe that is iShares.
You know what? Let's get out of here. Let's go here. ECH. Let's see what it's doing. So obviously, what would you call that? Now that you've seen, Hunter, what would you call this little thing over here? Now that you've watched a small presentation, do you see something right here at the end building?
I do.
What is it?
I see a little bit of a flag.
Yeah, some kind of a flag building. Now, again, they build because algorithms use these highs and lows to get in and out of the market, which then creates the formation. So if we go like this and say, well, is that some kind of a flag? You better believe that's something going on there. You could even pull this line in tighter if you want. Something going on there. First, it came down like a flagpole. Now you have a bear flag. So this, right off the bat, when I look at it, I see bearish. I haven't drawn it up to tell me what it is, but I see bearish just looking at it. I don't like being below the 200 bar moving average, but because of COVID, a lot of stops are right now. Let's see how it's doing by the 50, the other big street pay attention average. So now you've got a flag building right at the 50 and sort of below. Most of the flag now is below this support line. So once again, simple analysis, not pulling my Omni, not doing any of that. You're building a flag below a support line, starting to test the 200 bar moving average. I don't really love what I see here. I do see that it's in some kind of a, some kind of a channel, not exactly parallel, but almost. So we can go like this, drop it back down here. But you see you're falling out of it now, right?
Mm-hmm.
Starting to fall out of the channel, building a flag, going to test the 200. I don't like it. Whatever HSCI is doing, it's not something I like.
Okay. Thomas, don't worry. I got you. But Thomas, if out there in YouTube land, if you're not subscribed to Metastock, now you have to subscribe to our YouTube channel. Just because I got to your stock. That's the rule here.
Everybody should subscribe to your YouTube channel. Metastock's great.
I think so. I might be a little bit partial. GDX.
The only channel better, of course, would be mine. No, I'm kidding. Just kidding.
Well,
I'm just kidding.
GDX.
GDX.
Vanek Vectors.
GDX. So, Vectors, the gold miners. Interesting because this is sloppy, but still looks a lot like, you know what, let's just change some of this. Let's just make this look a little better. All right. So you can see that it built the same sort of plateau that gold did right about here. Well, I know I should be defining that with smaller trend lines, but remember gold put in a triple top thing right about here? Well, this is gold miners. What this looks like, however, is a flag, which if you ask me, I think it's right. I think gold is going higher. And being that the miners are now putting in things called bull flags, I have to say, I like this and I like gold for when it starts to head back up. I think it breaks out this time. So let's do a parallel of that and see that this is just a little baby bull flag building here. Now, you don't need flags to be large. You just need them to be visual. If it looks like a flag, it's a flag because this is a fine art, not a science. That's what I like about it. So that to me is a bull flag. We'll make it a little darker and then I'll make it bigger for you. So right off the bat, you see that it's building a bull flag. It's got this plateau thing. It does, you could certainly stretch this into a little strange head and shoulders as well, which is opposite of the bull flag, but not after I explain something to you cats listening in. See this head and shoulders? That's supposed to be something that tops a market. But a baby head and shoulders like this is only a continuation pattern. It's not a market copper. It will usually show you continuation in the same direction. If this head and shoulders started over here, the shoulder was ginormous, the head was in the middle, the other shoulder was on this side of the chart, and it took up the whole chart, you'd have an argument that maybe it's topping. So you actually have what should be a bearish formation. It really is a bullish one. This shows you that it will continue higher, and there's a bull flag there. So overall, I like this, and I like gold, even if we get a pullback in the next few days.
All right, final one. Are you ready? Are you excited? All right.
What do we got?
Dollar Tree, DLTR.O. DLTR.O.
Let's go here. Well. Let's go to the averages that we know the street likes. So Dollar Tree. The healthy thing is that at least it filled this gap so far. You haven't filled this gap, so you've got a few gaps that need to be filled, one from here to here, right? So in between these two, you left a gap. You're kind of getting into it now. But there was also another gap here, which I'm glad to see it filled and then didn't fall apart. You had this gap between here and here. So you filled the gap, ran back up. As of today, of course, we had our down day. The whole stock market went down, so you can expect that Dollar Tree went down. But I like that you're testing the 200 ball moving average. I like that it's trying to get above this whole mess, because if you look, this is just a whole mess of stuff going on here. So if I put a rectangle across it, you see all the times you had trouble here. So it's trying to now get back above that, because that's all after COVID. So over here, you're getting the same thing. It's sort of trying to fight its way through that same area right now. But I don't dislike it. I think buy pullbacks in Dollar Tree. If we had to give it an intermediate term assessment, buy pullbacks. I think it looks decent. So of course, anything can come down for a few days, but that doesn't ruin a stock or a market. That just sometimes is a pullback. So far so good on a lot of the stocks we've seen. There's only a few stocks actually that we looked at that didn't look rosy. So interesting. I started this off by saying, if you look at the S&P, NASDAQ, Russell, and all of those, then you go to the bigger internals of FANG, they all look healthy. Well, we looked at a few stocks and we didn't find any that looked extremely bearish, did we? That's all part of the market, right? So we randomly pulled up stocks or at least suggestions from YouTube fans, and we couldn't find anything to call totally horrible. That's overall good for the market.
Overall, very good. Well, we've hit right around the target time. Oscar, any final words from you? You want to tell the people how to get a hold of you, number one. We flashed it on screen a couple of times.
So, all right. So, final words. Always put your stops in first. Don't listen to any of the crazy people that type on the internet, on Twitter, and all of these. The news comes out in the charts. So what I want to tell everyone is, if you just allow these charts to dictate your actions and your trading and tune that news out, you will seem like a genius compared to your friends. I kid you not. Don't let the news get to you. If you don't listen to it, if you turn into a blue-collar person that doesn't even listen to the financial news but uses charts and trades, I think you'll find an easier destiny. So if you'd like to find me, I run a live trading room. It's open basically 24 hours a day because markets never close. It looks like this. I usually have a live camera up, but we're using this camera for this presentation. So if you came to this trading room, you would click the camera on and you'd be able to see me on camera and you could hear my microphone. That happens at livewithoscar.com. Simply go there and create a free username and password, no credit cards, no nonsense, and find me at OmniChat. Work your way to the chat room. It's really easy. There's only a few choices, and you'll be able to converse with me directly, and we can have a one-on-one like this. However, it's a whole room full of traders with me and you going through the charts.
Wonderful. Greg, it looks like we lost the screen for a second. It looks like you switched over to your computer. So let's get that
I
screen
noticed
back
that.
on.
I'm sorry. I don't know exactly how that happened, and I haven't quite been able to fix it.
Part of your last words there, I don't know how I feel about them, Oscar, because I believe that everything that I see online is true. Everything that's on Facebook, right? If it's on the internet, it has to be true.
It has to be true. You ever see the crazy commercial with the girl that's dating the French? She's supposedly online speaking to a French guy, and she's saying, if it's online, it has to be true. And then her date walks up, and it's a total American-looking guy from down south, and she says, "Are you my date?" And he says, "Oui." The only French word he knows. So yeah, I mean, the internet is so scary. You've got to really be careful what you pick and choose from on the internet, and then you've got to verify it in other places before you listen to it. But I kid you not, the chart will verify all the financial news for you.
Do me this favor real quick. Bring up your chat one more time, because I think the screen blacked out on YouTube for a moment. So I wanted to make sure everyone got a glimpse at your chat room.
All right. So at livewithoscar.com, which is the website, you can, if I log out very quickly, I don't really want to waste time doing this, but I'll log out very quickly and just show you. If you were logged out and you didn't know anything about me, you'd end up here, livewithoscar.com. Simply register, fill out 3-4 pieces of information, no credit card, nothing at all. Log in. Once you're logged in, you will find me in Omni Chat, and you will find me in that chat room, which is this one right here. So just log in at livewithoscar.com and go to Omni Chat and log into the chat room, and you will find me there. I run this 24 hours a day because markets never close. Sundays, I'm working there. Saturdays, I live for my family and we enjoy ourselves. But from Sunday to Friday night, hundreds of us gather from all over the world in that trading room. And it's non-hostile. No one's allowed to bash. It's a great place to hang out. You're protected by me. If anyone bothers you, I boot them out of the trading room.
Wow. I feel like I need you in my life. Right, Oscar, thanks so much for joining us today. It was very fun. It was very informative. Learned a ton from you today. So I really appreciate you taking some time with us this afternoon.
My pleasure. Thank you so much for inviting me. Thank you for having Metastock and all your great technical support. And I'm more than willing to help you out on any of these. If you ever want to have me for another, I'm more than willing to work with you. Thank you so much. We probably will do that. Everyone in the audience, if you have not subscribed to our YouTube channel, do so. Do the YouTube stuff, the like, the subscribe, the share, whatever it is. I hope that everyone out there is staying safe. Please let us know if you have any questions. If you want to learn more about Oscar's methodology, feel free to contact him. Otherwise, thank you so much for joining us this afternoon. I hope you have a wonderful weekend moving into a holiday week next week. Thank you all for joining, and as always, happy trading. Happy trading. Thank you so much.